Welcome to another episode of the Weekly Crypto Check-In, recorded on August the 28th, 2024. I'm a host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert. Things are good. This is my second time on the air today, so I don't know. I'm not sure I'm cut out for full-on media
Yeah.
24/7, but yeah, I guess you get used to going live and being able to talk. Somebody asked me at lunch yesterday, "Have you ever presented to anyone?"
Well, you're just practicing your DJ voice is all you need to do.
Yeah, my DJ voice, exactly. So,
Yeah.
yeah, so it's good to see you. It's good to be back and
Yeah.
talk crypto headlines. There's some interesting ones today. Some
Yeah.
connections I have to a few.
Yeah, we're going to start out outside the U.S. today. We'll start over in Norway. So
Yeah.
Norway tax returns are public, and crypto tax non-compliance apparently is pretty pervasive. I can't say I'm terribly surprised. For years you've heard about, well, they don't know how to understand, they don't know how to track it. I don't feel like I need to pay my taxes, which is never a good excuse. And it's, at least in the US, I have no idea what it means not to pay taxes elsewhere, but at least here in the US. And yeah, it's pretty crazy. It's, I guess our first two bullet points kind of go together in that sense, but you got Norway, and then you even have Her Majesty in the UK, Revenue and Customs. I guess they kind of group that together, saying they're trying to nudge people to pay. I would say that there's going to be a lot of grumpy people years to come from now that all of a sudden get a notice of audit, or because these tax agencies are going to catch up. All the stuff on the blockchain is public, and they're going to figure out how to get you for your taxes that you've owed them. And guess what? There'll be penalties. So probably should pay your taxes as you go.
Yeah, I don't know if this is the most exciting two headlines that we've ever come up with in the Teton weekly crypto check-in. It does seem like crypto and taxes may not often go together and be synonymous. I think there's the broader conversation is the amount of people going into crypto, the amount of folks that probably own digital assets globally seems to obviously everybody agree going up and to the right. The question is, what's a effective way if you're trading the asset class? The ETFs, it's a little bit more cut and dry. Speaking of the big ETFs here in the US.
Right.
But I think the broader conversation is, there was a paper that came out of the National Bureau of Economic Research, and they looked at Norway, and they estimate that there could be as much as 88, literally close to 90% of Norwegian crypto holders fail to declare to tax authorities. And then, in the UK, there's this campaign, sort of PR campaign going out to get people to start sort of self-reporting. It'll be interesting to see how this plays out, because I was just on a LinkedIn show as a listener the other day, where they talked about the merits of custody. Do you go through these ETFs, or do you do self-custody and the whole not your keys, not your crypto?
Right.
The moment you do that, it brings up the question of, how do you report the taxes, all this type of stuff. So it's just, there's a lot of stuff to sort of work through in the basics of owning these assets. But I thought these two headlines were, if nothing else, things that I think are going to rear their head. As you said, all this stuff is ultimately tracked and can be identified.
Yeah, it's admittedly, taxes, at least in the US for crypto, aren't terrible if you're doing everything on one exchange. Like Coinbase will make it easy. They'll give you the right form to file. Things get hairy very quickly when you start using multiple exchanges, because they can't deal with cost basis and all that other stuff correctly. Much like even if you were transferring, say, stocks between two different brokerages, that gets handled for you. So you have that, and then if you do DeFi, good luck. It gets even hairier. So the software out there now is poor at best, in my opinion, and admittedly it's a tough challenge to solve and build that kind of software. But that is also not a reason not to pay your taxes. I'm all for paying your legally required amount of taxes and nothing more, and but also not skirting taxes is pretty high on the list.
Well, for years, investors and speaking of alternative assets and private markets assets, things like LPs. For a long time, you heard the comment, these are just too hard, right? It's hard to report and track these interests and private fund interests in particular. When it comes to taxes, you have to deal with the K-1s. They're always
Hmm.
late. Um, and so, when you talk about crypto, somewhat of that sort of same narrative. Although I think people are still buying it. It's just a question of when do the regulators, shockingly, kind of get their house in order.
Right.
And I think it's going to come down to when the amount of dollars become bigger and bigger and bigger, and the government, will recognize, okay, there's a revenue there. So
Hmm.
they're going to start finding out that they're going to need a more effective way and better technology, because I do think multiple people will have multiple exchange accounts, just like they do with their brokerage accounts. Not
Right.
everybody,
Yeah,
but
sure.
multiple people. A lot of people out there have multiple accounts. So
Yeah.
anyway, more to come. Starting in Europe, no surprise, and likely to be something that we see more of here.
Yeah, it's not necessarily in our notes, but something I read was, you know, I think the average inflow for BlackRock's ETF for Bitcoin right now is like 220 million or something, kind of a day, um, on days that it has inflows, and that quickly adds up to regulators caring,
Yeah,
and figuring out that'll start to get politicians in order, in line, and all that stuff. So, anyways, we'll get back on
yep.
track here. Um, so the Fed, it was big news this last Friday. People is highly anticipated of sorts, but why don't you give us the rundown on this one?
Well, they were out. They were out in the Tetons. I mean,
Yes.
they were hanging out in your rarefied air, right?
Yeah. Yeah.
The Kansas City Fed has includes the region of Jackson, Wyoming.
Mhm.
So they host every summer, late summer, right before Labor Day, their kind of big summit. And of course, Fed Chair Jerome Powell, known as Jay Powell,
Mhm.
his remarks are always highly anticipated. Any of the chairs, whether it was Greenspan, Bernanke, now Powell. And so I think it was Friday, during the press conference, he came out and announced that, okay, that the time has come for potentially rate cuts. They've
Right.
seen enough, and there's going to be an attempt to get a soft landing. I had on the co-CEO and group CIO of a really large asset manager, actually out of Atlanta today, and I asked him sort of this macro question about rates, because a lot of what they do is impacted by rates, being a fixed
Mhm.
income type credit manager. Um, and it's interesting. I mean, there's a lot of people that are highly informed about this and have deep takes, but uh, the question is, are we going to see over the next 3, 4, 6 quarters, you know, no, I don't think anybody thinks that we're in a 2008 scenario where we're going to go back to zero.
Mhm.
But it's also difficult. This CEO is saying to say, okay, you had all these businesses and all these assets that were sort of built, and their models were all based on a zero rate environment. Then you go to 8,
Right.
there's going to now need to be time, to adjust the business model, to adjust to the new rate environment. So it's just, again, you talk about interest rates and financial markets, and everybody's going to have an opinion. It's kind of
Mhm.
like, we'll have to wait and see. But I do think that we'll see. Uh, uh, it looks like, some rate cuts probably by the end of this year. Whether it's 1, 2, who knows?
Yeah. Purely from
Data dependent.
yeah, sure. That's their favorite phrase. I would say strictly from a crypto lens, we have never had a bull run where there wasn't loose monetary policy. So I'm happy to see them changing their tune, so we could
Yeah.
try to stay on schedule here. So
Yeah. Yep.
yeah.
Well, my thought is we at least get one cut before the end of the year, but we'll just have to see, depending on what the data says, as they say, what what the Fed says. But
Yeah.
anyway, big news on Friday of last week, and we'll continue to report on it.
Hmm. So our favorite villain at the SEC,
Mm,
loses in court again. The case wasn't lost, but in the Kraken case, where they're filing or suing them for unregistered security sales, just like they like to do everyone else. They have that case is a little bit further along, but they lost on there's no such thing as a crypto asset security. This is Gary's favorite phrase that he must have made up to seem smart, or something else. I'm not quite sure. But anyways, there's no legal definition of crypto asset security. That was his way and the SEC's way of looping crypto into the security model, and governance is my take on it. And to see him, a court finally say, no, you can't use that phrase. It's misleading, and if anything, it's false. So, kind of, I guess, good news there. Not much news, but just
Mhm.
an interesting point. So,
Yeah, yeah. There's a few things on the SEC front that we're going to talk about here in the second half of today's check-in. So yeah, that's the first one.
yeah, maybe we'll just jump to the rest of the SEC so we can just get them out of the way. We would literally like that to happen in general in life. But so the SEC has announced that they are that they are suing Abra. Abra is a exchange largely, well, as of today, I don't think it services any U.S. customers, as far as I know. They did for a while. I have personally used it in the past, admittedly for something that they probably got in trouble for here. So the unregistered offers and sales. So I have once upon a time put crypto there and did some staking. They called it, basically just getting interest on it in their model. But yeah, I know you have a little bit of a connection to Abra, so this one
Yeah,
probably caught your attention.
it did. I host a couple of podcasts, the ATL Alts podcast, and a newer one called Asset Backed. And one of the guests that I had on ATL Alts was a new executive that joined Abra. Now, the name of Abra, ARBA, the actual real name of the company is I think it's Plutus Lending
Mhm.
LLC, Plutus Lending.
Yep.
Um, and this might be breaking news, or at least breaking news because I hadn't checked the headlines since you put it up, but they settled with the SEC
Whoa.
yesterday. So
Oh, I missed that.
they
Okay.
were in a case, and the document is out. Was actually filed on August 26th, so it was only like
Mhm.
2 days ago. So
Yep.
it's very recent. But yeah, there was a complaint filed by the SEC. I had an executive on that talked about how Abra was trying to, and that you can listen to the podcast, but talking effectively how Abra was trying to go out and build like a higher touch set of crypto solutions, offerings, and capabilities to cater to like that ultra high net worth family office, like uh, private wealth, independent RIA customer.
Mhm.
Because historically they had, kind of had more of a retail model, and so that was kind of interesting. You can go out and listen to that, just self promotion. But this case, yes, that I think you're talking about. There was apparently a product called Abra Earn, which the
Yep.
agency said had amassed as much as $500 million at one point, and they reached a settlement with the Securities and Exchange Commission over these accusations of them selling unregistered securities. I'm looking here through a headline to see if I can find what the settlement entailed. I'm sure it's all in the 14-page white paper.
Mhm.
Um, but yeah, I mean, I think they've agreed to return as much as 82 million to customers in up to 25 states as
Interesting.
part of um, as part of another settlement. And it'll just be interesting to see as you dig in and sort of pull apart the news here. Of course, the company's saying nobody was harmed, no consumers
Right.
were harmed, and this is Abra's second settlement. They paid $150,000
Mm.
fine to the SEC and the CFTC in 2020, so they had some experience with dealing with the agency. But yeah, more of this regulation by enforcement kind of approach.
Yeah.
It's interesting to see, amidst what we're in the midst of going to be a very contested presidential election, like who ends up running the agency,
Right.
um, and the direction, and that's a broader question, but the
Mhm.
direction that they take as it relates to crypto.
Yeah, it's so a couple points. Hopefully with this settlement that they've done, it doesn't follow the same path that it did for Kraken. We kind of mentioned them earlier in this episode, but Kraken about a year ago did a settlement under similar circumstances. It was announced and it was
Hmm.
settled all the same day, and within I think 9 months, the SEC had sued them for something else. Like, they kind
Yeah.
of went back for a second, a chunk of blood there, or chunk of flesh. So, anyways, that aside, you know, so you mentioned the political thing, and it made me think. So there's this whole group that is literally titled "Crypto for Kamala" or "Kamala for Crypto." I forget. I always get it backwards, probably. And then you would think that if there's any sort of like connection between the White House and the way that Gensler's running the SEC, there might have been some communication like let's tone it down a little bit towards the crypto community. Potentially, these are
Yeah.
some swing voters, right?
Yep.
And then you have these two things within a week.
Yeah.
Well,
Yeah.
actually, we haven't got to the second one. So the second one is OpenSea, is an NFT marketplace. That back when the summer of 2021, when everyone was buying NFTs and thought everyone was going to be rich from this, you were likely buying them on OpenSea. They got a Wells notice, so they haven't technically been sued, but they're down the path. And the SEC is claiming that these NFTs are unregistered securities, surprisingly enough. And here we go. But there's
Wait,
a playbook to fight the SEC here, so maybe that's the good news for OpenSea.
I was going to say, I wonder if you look back at who's representing the companies in these cases. I wonder
Right.
if it's a revolving door of lawyers, that really are highly connected, very specialized. They understand the playbook. Like
Yeah. Well,
it's be
at this
interesting to
point,
see.
there's been enough of these lawsuits they could just do find and replace on their documents and just resubmit them. Like,
Yeah,
yeah.
exactly. So I remember the Bored Apes NFTs, which
Mhm.
became all the rage like 2 or
Yep.
3 years ago, and there's this whole discussion amongst those of us that are maybe newer to the crypto space and digital
Mhm.
asset space, like, oh, it's like a JPEG. Like, why would you ever buy that?
That's what it was.
And then yeah, you had trading cards of like NBA players, but done digitally. We called them NFTs, and
Yep.
I just remember that whole conversation like 2 or 3 years ago. What's happened to prices? I'm curious of
Way down.
these
Way
NFTs down 80%, 90%.
down. In most cases, I would, yes.
Yeah,
Maybe
yeah.
more. I
There's
mean,
always
99% would not surprise me. This is, it's all about liquidity, and no one's willing to buy. Prices go to the floor. So, and you know, I
makes sense.
don't think the prices got crazy like that back then, largely because people were trapped in their houses and the government was giving them money.
Yeah,
And it felt like some form of gambling that felt
yeah,
social.
right.
Yeah.
And there is that element of high risk, high reward in this space, right? Like there are definitely
Mhm.
market participants who they are in it to trade. They're expecting these massive swings, and maybe they're not investing slash, I don't know that it would be called investing in all corners of the financial markets.
Right.
They're putting money on the line, knowing that the stuff could go up 1,000%,
Mhm.
and swing the other way a month later
Right.
and be down. So it's just interesting because that is definitely an aspect of this market.
Mhm.
And I wanted to give a postscript on Abra. The executive I had on, Marissa Kim, was part of a division that they launched in April of 24 called Abra Private.
Mhm.
Abra Private was launched alongside Abra Prime, which was Abra's effort in growing. They quote, the idea was offer digital asset services in the U.S., including both yield and staking as a registered investment advisor or RIA to private and institutional clients. So, high net worth investors, family offices, institutions. So that's the effort that we talked about. We did not talk about the lawsuit on the podcast, but it is interesting to see, them back in the news, and I'm sure they're glad to have this behind them.
For sure. Because I imagine it's been hanging over their head for a while. It's not like it happened yesterday and got settled on the same day. So
Yeah,
lots of
yeah,
sleepless nights there. Um, so we'll jump back up a bullet point to kind of pick up on that one. So tokenized bank deposits around the world, they totaled around $200 trillion. It's a lot of money.
yeah,
Um, and I think the point here is they're being tokenized. You're seeing um, different things slowly get tested on the blockchain. We've talked about tokenized car titles in California on the blockchain, and you're seeing it different places pop up. Obviously, all bank deposits are not going to be tokenized in the same day, but it will come. And I guess I bring this up more as a point to say, as they get tokenized, these different, because it's not going to all end up in one network. That's just, the chances of that are basically zero. So you're going to have networks that need to talk to each other. And there's some companies working to solve that. Quant is one that's based in the UK that is working with those kind of institutions and federal banks type situations that will help them interoperate between them. So more of a stuff is happening. It's happening slowly behind the scenes, and then all of a sudden one day we're going to wake up and be like, oh my gosh, look at a bunch of there's maybe news headline that $20 trillion was tokenized, and then quickly we'll over time get to 200, no doubt.
Well, on this point of tokenization, I think I mentioned to you before we went on live that I was on a LinkedIn live earlier this week with a couple of executives from OnRamp, which was acquired by a company, I think it's called Securitize. Is that right? Do I have my facts
Correct.
right? And
Yep.
they help individuals and now advisors. I believe one of the individuals on the call was formerly an executive with Schwab, the big, discount
Mhm.
brokerage firm, but also custodian that supports advisors with technology, custody service, etc. Point being, they were talking about, you know, at OnRamp, how you can now partner with them if you're an advisor and help your clients get into digital assets, get into tokenized assets. I would think over time, but it's more of a model. Is it right to try to own the assets more directly versus through a centralized like
Yeah,
custodian like a Coinbase? Is that
I mean,
right?
yes, but I think that, admittedly, we spent 15 or 20 minutes talking about this when I recorded with Philip and Dalton
Yeah,
on their podcast, Convince Me. They're like, what's the point of tokenizing a lot of this stuff? You see tokenized treasuries already happening. But like when you could tokenize stuff that you personally own, like what's the point besides being able to prove that you own it? And I think that what it does is not that everyone needs to get levered up, but like it allows you to get leverage easier on things because it's a marketplace is kind of already existing, or the rails are there for it to happen. And that's just one of many examples I probably could provide. But I think the ability to prove and use as collateral in a much easier, swifter fashion.
Yeah, and where I think about those types of firms, like I mentioned with Securitize and OnRamp, like if you want to tokenize, let's say a portfolio of assets, whatever they may be, and there's a way
Mhm.
to do that, would you then want a way for you to monetize those? I mean, I'm curious, like how these markets become more liquid, right? So let's just say Robert or
Mhm.
Andres owned a bunch of horses.
Okay.
I'm gonna
Mhm.
tokenize those in a way, like
Right.
they're race horses or whatever. How do I get that offering out to people without having to go through the whole process? Speaking of the SEC, like the
Hmm.
traditional way would be like, oh, we're going to set up a private fund and we're going to go then solicit and get people to buy into our LLC. The LLC owns,
Hmm.
horses. You own a share of horses. Like, walk me through what you
Yeah.
could see evolving in that space. It could
Yeah.
be real estate, it could be horses, it could be
Mhm.
artwork. Like,
Yeah. I mean, what choose something you personally own that's got five figures of value, so, something
yeah,
like that.
like my
Um,
house, a
sure.
title on my house or a
Yeah.
car.
Yeah. At the end of the day, I'm going to set aside and say regulations have been figured out and they're
Yeah.
reasonable. Okay.
Yeah, we have to suspend reality. But
Yeah.
we're in the election season. I mean, this
Right.
is the time to do that.
So this is where we make our Christmas list, right? What we were
That's
hoping and
right.
looking
What
for,
would
right?
we like? What would we
Yeah.
like?
So in a world where that exists, I think that the way it could easily happen today, and it's still a bit of a marketing issue, is through DeFi. You could go in and you could say, I'm gonna with a smart contract, I'll be able to prove that this horse, every time it goes to track and runs around and wins money,
Yeah,
that I'm willing to sell off a third of all sorts of winnings. And people could fractionally come in. I could choose how many shares or tokens I want to sell of
sure.
that. And the smart contract would monitor the results and automatically feed the money in. Obviously, there's a lot of moving parts there that would need to be wired up together, but that's an example.
Okay. Yeah.
I think, a house is obvious. If you're renting it, a car's a little bit trickier. Like maybe you're an Uber driver and you want to, not that Uber drivers make tons of money, but I want to be able to sell again a third of my, revenue stream.
Yeah.
And I want that cash now. So a bit of like lender financing of sorts, or
Yeah, I mean, there's like earned wage access models out there today that exist that are, they're growing and they're big, like in the fintech context, where you can, if you're a company, you can go in, set up a partnership. Let's say they have a lot of hourly workers, or they want to, pay their workers, or they do pay their workers on a weekly basis. You can go in and set up a model where you can, advance them 20% of their paycheck that they're going to get on Friday. You can advance it to them like on Monday.
right.
For a fee. So there's and there's fractionalizing and like buying wages or salaries of people that think are going to be high potential earners in the future. And it's just it's interesting. I think this whole tokenization narrative, we've talked a lot about it. We need more regulation. The everyday person's still trying to wrap their hands around, should I buy IBIT? Should I buy, from some of these other
Sure.
ETF issuers? Like there's just a lot to cover. Which brings me to one point that I'll make before we wrap up. But let's go to PayPal and
Yep.
stablecoins.
This one's gonna be quick. This more of saying, so PayPal's got their stablecoin. It largely has only been within the PayPal system. They've done a little bit where you can take your PYUSD stablecoin and it can go into Solana. 80% of the dollars that have gone over into Solana are ending up in their DeFi. Beyond that, I don't know too many details about what's being used in the Solana universe for that. But I think the headline here is it reached the $1 billion milestone. And, I think that we should start a stablecoin. It seems to be the thing in vogue these days. No doubt. With interest rates where there are, I'm sure they're loving it. So, yeah.
Yeah. So you and I talked about this yesterday, and I think I mentioned this a week ago that I was, I'm an advisor with a independent RIA out of Nashville. I'm building up the Atlanta market. So that advisor is Gramercy Park Wealth Advisors. One of the things that we're looking at all sorts of different alternative assets. If we put crypto in that, clearly, we're trying to get smart on it, trying to get educated on it. So I'm spending time, like I said, listening in on these LinkedIn lives and different shows. I don't know why it took me so long, but I called BlackRock. I went on. I created an account as an advisor, which we didn't have, and I'm like, I'm going to start looking at the materials and educational resources and other things that they're putting out. And we had talked about this probably 6 months ago or a year ago in another, I don't know if it was another podcast, but the amount of assets that are held away by independent advisors.
Yes.
And so there's a link that says recapture or build your practice.
Right.
Anybody that has a wealth management platform is always thinking about ways to grow the practice, right? How do you add more clients, more assets? There are, according to BlackRock, there are $960 billion of held away crypto assets by high net worth and ultra high net worth assets. And 50% of retail investors would consider changing banks or brokers if they do not have an appropriate digital asset offering. So that caught my attention when I went to the build my practice. Secondly, millennials. I think I'm Gen Z because I was born in late 70s. I think people that were like 80, 81 is like the cutoff, or Gen
82-ish. I'm like right on the line. Yeah.
They're like Y. And then you have, and I think Y and millennials are almost the same thing.
Yeah.
And then you have Z, okay, which is like everybody that grew up with social media, and they're probably under 30. Millennial millionaires, 83% of millennial millionaires, again, this is according to BlackRock's research. I don't know who the original research is by, but 83% of those millennial millionaires hold crypto, which may not be a surprise to you because you've been in it a long time.
Yeah.
They're younger, they tend to be male, they tend to be urban, or live near, major metropolitan areas.
Yep.
And we happen to be in Atlanta, so I'm just thinking to myself, the wheels are turning. I don't know about stable coins, but digital assets.
Yeah.
In general, millennial investors are more likely to hold crypto than stocks or mutual funds.
Mm.
Isn't that interesting? And then lastly, crypto has grown to a 1 trillion asset class in a decade. And, we've talked a lot about how quickly, these ETFs have grown. So obviously BlackRock's promoting the ETF as a way to own it.
Mhm.
Um, but, some of the headlines, like, what is Coinbase? I think we in the inside of the industry, I'm not calling myself an expert,
Yeah.
but, you know, what is Coinbase? You'd probably laugh me out of the room if I asked you that.
Mhm.
But the whole point being platform, education, tools, research,
Mhm.
education. I think everybody agrees we're quite early. More regulation is going to help, but I just wanted to give like a real life kind of what are we doing with this stuff,
Yeah.
and how's it apply to me, sort of perspective in our check-in this week,
Awesome.
because I'm thinking about it. I'm thinking about like what is that advisor opportunity and what's that client want to hear about, and it's a lot to do.
Yeah, I think that advisors that aren't open to the idea of having crypto held by their clients are asking to be um, out of business in the long term. But time will be the
Yeah,
judge of that. So,
time will be the judge of that. And the eighth and final of their FAQs, do you know what it is? Do I have
mm.
to pay taxes on my Bitcoin?
Well, if you have to remember, the whole Bitcoin movement started initially very much rooted in libertarian mindset,
Yeah,
which is so not a surprise, but you hear less about that each day, and at least the libertarian piece of it. So
yeah, for sure.
awesome. Well, thanks for joining us on this week episode of the Weekly Crypto Check-in. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-in. Take care.